What's going on, everyone? In this video, I want to talk to you guys about what I've learned from scalping. And when I'm talking about scalping, I'm talking about scalping the futures. I'm talking about the NQ, the big bad, monster out there in the future space. Now, a lot of traders like to trade and they like to gravitate towards the NQ because of the range, okay? Because of the volatility, because of the flashy gains that are posted online with people taking payouts from prop firms trading NQ 10,000, 20,000, 30,000. Let me let you guys in on a little bit of information from my experience in taking payouts, trading the NQ, going through evaluations, and scalping specifically, because this scalping thing, it is definitely profitable. However, there's a big asterisk when it comes to how we need to prep and prepare ourselves to trade these accounts when you're in evaluation and when you're in funded accounts. So the first thing with scalping futures for prop firms, this day and age, it's very easy to get capital. Now, when you're trading for prop firms, yes, it's demo account. Yes, if you do have skills, you can get paid real cash from it. So it doesn't matter if you're trading live, you're trading demo, whatever. This is a game in itself to show yourself that you are a profitable, consistent a trader, and you know what the hell you're doing out there, because you can take out checks from these prop firms. Now, one of the things when it comes to scalping is a lot of strategies, right? I've got a strategy for scalping. I've got a specific strategy for scalping evaluations where I'm going to go on pretty much almost max size. Now, before I get the people in the comments saying, well, that's not the smartest thing to do, you can lose accounts. I know that, and I've lost plenty of accounts, but along the way, I've also passed plenty of accounts and worked those accounts once they're in funded stages to get the minimum payouts every pay period and once a month, here, there, and you eventually lose the account, you do the process all over. I'll be very transparent. My goal with prop firms, anywhere between $4,000 and $6,000. I do trade options full time, so that's where the majority of my money and time is spent, is trading options. I've been doing that for about 10 years. Eight of those years have been full time, but I'm looking for additional income. I'm looking for supplemental income, and that supplemental income is going to be coming from trading futures and using prop firms to my advantage and your advantage as well. So when it comes to scalping, here's the thing: when you have an edge and you have a strategy and you've back tested enough and you've forward tested enough, and you've come to the conclusion on the specific strategy that you're going to use. So, like, for example, I have a strategy where I use a 20 SMA and I'm looking for a 1-to-1, or I'm looking for a quick 5-point take profit on my initial setup. Normally, scalping strategies are going to have a high win rate. Okay, so we're talking 70%, we're talking 75%, we're talking 80% of the time. The problem, and here's the big problem that a lot of people don't understand, is because they go through, they do some back testing, they do some trading, maybe they have a few good days and they see, wow, this strategy is really operating at a 70 to 80% win rate, sometimes 90% win rate. The thing is it's not going to happen every day. There's going to be periods in a block, in a series of 100 trades, in the series of 30 days, of 60 days, of 90 days, where your equity curve might be flat 3-4 days in a row, where your equity curve might go negative 3, 4, 5 days in a row. And it's typically during those specific times when traders are scalping and they start to go into drawdown, or they have multiple flat days, or days where they feel like they just can't get their feet under them, is where they tend to deviate from their system and their edge without ever letting the edge run through. The thing with scalping is you need a lot of trades, and you need a large body of data and a large body of work to understand, where can you make some adjustments and some corrections, and where can you kind of tinker with specific times that you're trading the market and specific stop losses and specific take profits to kind of increase that win rate percentage a little bit more. The problem that I see is that a lot of times, let's say, for example, they take the first trade of the day, it's a winner, they grab 4 to 6 points off the market. They take the second trade of the day, it's a winner, they grab 4 to 6 points out of the market. It continues to go in their favor, another 50 points. The psychology of most traders is, well, I just won 2 trades, watched my trade go another 50 points without me. On the next setup, I'm going to still take my small scalp, but I'm going to double my size. I'm going to triple my size because I want to make more money. And when I make more money, I'll be able to stop trading for the day and that'll be it. And guess what happens on that third trade? Because trading is a game of probabilities, we never know which one of our setups, according to our edge, is going to win or lose. All we can do is manage risk, and all we can do is execute the trade. That third trade that they take not only is a loss, but they panic and either A, sell too quickly and the trade goes in their favor, or B, it never goes in their favor and it starts going into deep, dark drawdown and they don't click the sell button. They don't, abide by their risk settings that they're setting in place for themselves. And they take a huge loss, giving back wins from the 2 trades prior. That's a big problem. And then it becomes a hamster wheel effect where they do it again. And the next trade, now that they're down, they try to put on more size because they want to recuperate the losses from the previous day or the previous trade or the previous week. And it never really works. So the only real way that you're going to ever be profitable scalping is this. If you're trading in an evaluation account, whatever money that you're putting up to go buy an evaluation account for the opportunity to get funded, you need to look at that risk as gone. Okay, so I'll just use a couple of examples. Top Step is a $50 fee for $50,000 account. Let's say you go out there and you spend $200. You have 4 accounts. That $200 is good as gone, right? That it's an investment. You're investing into the opportunity. Okay, sometimes opportunities don't work out. It's an investment. So consider it gone. Once you consider it gone, it becomes a little bit less stressful because that money is already coming off of your bottom line and you're not really focused on it anymore. And you can do one of 2 things. You can trade them very aggressively with heavier size in hopes of passing 1 or 2 of those 4 accounts and potentially losing 1 or 2 of those accounts to ultimately get to the goal of being funded. Or you can trade them a little bit more like you would trade a real cash account or a real funded account, but it's going to take a little bit of time. And when I say a little bit of time, typically speaking on a $50,000 account, you should be trying to shoot for, days of $80 to $250. Anything over $80, you should probably be stopping out on the day. $250 should be like a home run trade. Anything over that is just astronomical and it's great, right? And more than likely, you should be trying to stop yourself out, set a daily loss limit for yourself, maybe around $200, right? Or $300. And anytime you hit your daily profit target, you stop trading on a day, you come back and do it again. Now, this way of trading an evaluation account, yeah, it's going to probably take 3, 4, 5, 6 weeks to pass an evaluation, but you're building good habits along the way. And I would definitely recommend that for someone who is, maybe new to the futures game or new to trading altogether. If you've been around this business a little bit and you do have a profitable strategy and edge, continue to take the same setups that you would normally take, just double, triple your size, right? So if you're normally trading 5 micros, put on 1 or 2 mini contracts, and that's going to speed up that, 2, 3, 4 week timeline to maybe 1 or 2 weeks. And then you're going to pass that evaluation and get into the funded stage. And when you get into the funded stage, make sure you take the first week or 2 a little bit slow. It's not just about getting in there and trying to take that first payout 2 weeks later. Build that account up a little bit, build up a balance of $1,000, of $1,500 over the first couple of weeks. And then you'll be able to take a little bit more size and you'll be a little bit more calm and you won't have that, deer in headlights look the first day when you have that funded account and you're trying to make $20 million, right? So when it comes to scalping, and the main thing that I've learned, and this is what I want you guys to take away, is when you're scalping, typically you're going to be taking more, you're going to be taking a larger number of trades throughout the day, intraday, okay? However, that does not mean that you need to go out there and trade 15, 20, 30, 40, 50 times a day. If, let's use my strategy, for example, and let's use today as an example. Market opened up and let's say we're looking for 3 points, okay? And we're trading 1 mini contract. I'll just throw a generic, situation out there. Let's say we're gonna, because we're scalping and the NASDAQ is gonna be very volatile and it's gonna move around a lot. Let's say, for example, we're willing to risk 12 points, but we want to make 3 or 4 points, right? I know that risk to reward ratio is a little screwed because if we lose 1 trade, it's going to take us 3 trades to make it back. But again, remember, when you're scalping, typically your strategy should have a high win rate percentage, normally over 65, 75, maybe even 80%. So in this first particular trade, you would take this trade and it would be a winner. The second trade, you would take this trade, you would almost get stopped out, and then it would turn into a winner. Now, if you were trading one micro contract and you're taking, let's call it 3 or 4 points, then you took, $60 to $80 on one trade, you took $60 to $80 on 2 trades. Let's say you're up $150. What tends to happen is traders fall into this pattern of, well, I can just sit here and do this all day and I'm just going to make thousands of dollars. No, you have to stop yourself out at some point. And until you have a big enough account size, $3,000, $4,000, $5,000, $6,000, $7,000, $10,000 worth of cushion, you can't sit there and kind of trade back and forth all day. You really need to protect those gains. And a lot of times traders think that they've landed on the perfect strategy that hits at 75% win rate, and they think that they can just do this, a gajillion times a day, and they're just going to be millionaires in 30 days. And it just doesn't happen, because they take that one loss. They may have 5 winners and take one loss and go all the way back to break even, and then completely come unraveled and go on tilt and blow an account. I've seen it before. I've heard stories, I've talked to traders, I've mentored traders, and I've seen it. Okay, so we have to protect those gains. I'm a big fan of risk management. I'm a huge fan of protection of capital, because if we don't protect our capital by coming tomorrow with money to trade, we're not going to be around next quarter. We're not going to be around in a year. We're never going to really get to where we're taking serious payouts. Sure, you can get lucky for a pay cycle here or there, hitting a hot market cycle, take a payout, but you got to really know what you're doing as far as your business and money management skills, and is also with your trading skills. So again, that's staying disciplined and sticking to your strategy. Again, many scalpers don't stick to their strategy, or when they have 1 or 2 or 3 different entry models for strategies to take, they're taking 3 different types of trades. They're taking, low if they, high if they breaks. They're taking, consolidation, breakdowns, and they're taking, bull flag, bear flags. They're taking 20 SMA plays. They're taking VWAP plays. They're bouncing the stock where they think that it's going to go on momentum. They're trading news. So when you start mixing all that stuff in a pot, it's like a big pot of gumbo, right? It's just a big pot of just all kinds of stuff thrown in there. You need to really dial it down and really focus on 1, 2 entry models max for taking trades. And you stick to those trades. You live and you die by those trades, and the only thing that you do is really hammer down which stop loss is giving that win rate percentage a little bit higher of an edge. And the only way you really do that is by forward testing this. Now, again, you guys may hear me sometimes talk about using the reason why candle as a stop. If we were trading a 5-minute time frame, and let's say we're trading 2 or 3 micro contracts, sure, I have no problem putting on 22 points of risk trading 3 micro contracts. What's the worst that can happen? I lose $100, lose $120 a trade to potentially make $100 to $120 on a trade. That's a 1-to-1. Those odds are pretty good. I like that. That strategy works, about 60 to 65% of the time. But let's say, for example, you got a scalper who might be looking for 3 to 5 points. That strategy might hit at a little bit higher of a win rate percentage. But again, we don't want to take a 22-point loss just to make 3 points, right? It doesn't really make a whole lot of sense. So we kind of have to tie that down a little bit. Maybe we still going to have to give ourselves, because we're trading the NQ, we're going to have to give ourselves a little bit more risk, but we're hoping for that higher win rate percentage. Now, because we're going to have a higher win rate percentage, our account balance, our equity curve is going to start to grow. And when we do take those losses, yes, after 20 trades, 1 loss is going to wipe away 3 trades. So now we have 17 winning trades out of 20, right? Or I'm just using, just giving you guys an example. Then maybe we win 5 more trades, we take a loss, and then it knocks, 3 of those wins off. And then we have to, win 3, 4, 5 more trades before we start building an equity curve. That's a smooth equity curve. So make sure we're not giving ourselves, 30, 40, 50 points of risk to potentially just make 3 to 5 points. But again, open it up just a little bit and understand that you're going to start to accumulate more wins along the way. But here's the key. When you win 2, 3 trades in a day, you got to stop. Okay, you gotta stop. I don't care if you backtest and you look at, 1 winning trade, 2 winning trades, 3 winning trades, 4 winning trades, 5 winning trades, 6, 7. Oh my gosh, if I would have just, traded 7 of these trades, I would have been able to make money on all 7 of these setups. I get it. But what happens when you win 1, win 2, lose 1, lose 2, win 1, lose another? You just start, mixing yourself all crazy, right? So the key to scalping, okay, in making a scalping strategy work is limiting yourself and limiting the amount of trades after you go green. If you still got that itch to want to trade, sign up for another account. If you guys want to sign up with Apex or Top Step, those links are down in the description box below. Sign up for another account and go get your fix there. Or let's say, for example, you're trading one mini contract, and let's say you hit 2 or 3 winners. You know what I would do? I would go out there and trade 1 or 2 micro contracts after that. Because guess what? Even in the worst possible scenario, losing a trade or two, trading 1 or 2 micros is not going to give back the gains, okay, from winning 2 or 3 trades where I was trading 1 mini contract. Make sense? Build this into your plan, implement it, work the plan, stick to the plan. Let me know how it goes in 30 days, guys. Comment back on the video. If you guys want to trade with me each and every single day live, that link is down in the description box below. I do have 2 spaces available to join Evolution Traders community, Discord, you know, live commentary trading. We're working on a trading bot for some of our scalping strategies. We're back testing a year's worth of data and getting the best possible stop losses. We're getting the best possible take profits. We've got a lot of amazing people in this room that are doing very, very well for themselves. And it's really good to see, because when you have a trading team that is working together, it makes trading so much more fun and so much more easier than sitting there by yourself, just kind of spinning your wheels in the mud. I'll see all of you guys on the next video. Make sure to like, comment, and subscribe. Let's get this channel to 7,000 subscribers. Let's get this video to 100 likes at least, and let's get at least 25 comments on this video, guys. I would highly, highly appreciate it. I'll see all of you guys on the trading floor tomorrow. Remember, tomorrow is Friday. Let's not give back and undo everything we did the past 4 days, okay? Let's take it slow. Let's take it small. A lot of traders have problems on Fridays. If you lose a trade or 2 early, let's just shut it down. If you make money early, let's shut it down, guys. I'll see all of you guys tomorrow.